What up, world? Welcome to the Succeed Podcast. Listen, I hope you get your notes ready. It's about to go down on another level. Stay tuned. Welcome to the Succeed Podcast with Russel Thompson. Check this out. Listen, man, we got somebody in the building that's going to take it to a whole nother level. Life is going to be on another level. And we're going to make sure that you guys don't miss none of these good nuggets that's coming out. Russ, what's going on, man?
What's going on, Dream?
Look, it's your second podcast now. You ready? You done. Shout out to Mom.
Shout out to Moms on the first podcast.
We enjoyed your mother. It was amazing. She's blessed.
She's dropped a lot of powerful nuggets.
Yeah, man. We'll go ahead and let you introduce your guest, man. My brother in here, he ready for him. Let's get it.
I had to bring this guest in because this guy here, he's a unique kind of a guy. You know, first of all, I want to commend him on his age to be in this type of conversation, right? Because this is we're gonna call this one estate planning 101. So, man, met this gentleman, man. He was more than dead serious about his business endeavors. And it just intrigued me because he was so young, right? Yeah. I was like, man, how can somebody be so young to be in that type of mindset, right? And so, man, I had to bring him in because we're trying to reach I don't know if you a millennial, bro. I don't know. We're going to call, we stick to those terms, whatever. No. Man, I got to introduce everybody to this man called Mr.Tyson. You know what I'm saying?
The King Tyson in the building.
Yes, sir. And like I said, man, what's going on, my man? How's it going, bro?
Hey, man, life is good, man. Things are great. I'm just enjoying it.
So what's your title name now, Doc?
I mean, hey, man, friends call me Wealthy Kane.
Okay.
That's just who I am, man. And,
absolutely. I'm a professional, so I always stick to the last name. You always say that from the first time I met you. I always going to respect somebody's last name. But Wealthy Kane, man, you in the building, man. What's going on?
I'm glad to be here, man. I thank you for having me, man.
Man,
appreciate you,
Doc.
Thank you, man.
So
thank you.
Listen, you came to me about what, 2 years ago?
About three years ago.
It's been that long, right? And what did you come to me for? Tell me. First of all, how you found out about me.
And how did you meet? That's what I wanted to.
Right. How you find out about me, and how did you contact me? And take it from there, Doc.
So long story short. I was living life like everybody else, and it was during a pandemic time. Well, we was like right around the pandemic time, so everything was kind of closed off and shut down. And depending on who you were at that time, it was either you was gonna sink or you was gonna swim. And my whole life, I've been a hustler, so I'm gonna make something out of nothing. Anytime, any given situation, I know how to adapt. I know how to survive. I'm gonna make it.
Yeah.
And for the pandemic, for others, and I hate that they had to go through things that they went through. But for me, that was the peak. That was my start. Like that changed my life.
Wow.
I'm thankful for Donald Trump, to be honest.
Yeah.
And at the end of the day, it was a lot of doors that opened for me. Gotcha. I met a lot of people. I met a friend of mine, and they told me because I was like, I wanted to start a trucking business. And they didn't take me serious. They thought I was going to play. They thought I was just playing because I was so young. And I got the contact information to contact Mr. Russell. And I contacted him. And when I seen that friend like a month later, they was like, oh, you really went on with it. And I called him and told him, hey, man, I want to start a trucking business. He was like, okay, and what about your estate? Because at the time, I was doing pretty good for myself. I had made more money than I ever made in my life.
What were you doing prior to that?
I sold cars. I did real estate and stuff like that, working 9-to-5 jobs in warehouses, whatever I can really do to provide for my family. But that's when I really started taking entrepreneurship seriously because I'm like, you see how quick a job can go. You see how quick everything can be gone. But you hustling and you your work and you your product, and at that point, you selling knowledge and you selling perspective and you selling, opportunity for a better life.
Yeah.
You know what I'm saying? Things become different.
Wow.
I just took control of my destiny, and man, I linked up with Russell, and it was history from there.
Man, so you came to me about the trucking company. We had talked about a capital holding company because you a young man, and we knew that you were going to be creating multiple streams of income, like you already mentioned here, And so the main thing I think you got out of all of this was that, hey, man, I caught the concept. I need to have one company that I'm taxed on,
Absolutely.
But then all my other revenue streams need to be kind of filtered through my, my capital holding company. Man,
Absolutely.
hey,
Yeah, man, all right, let me rewind tape. Let me pause for the call. All right, so bro, you was
24.
24 selling cars.
I was selling cars when I was 21, but I was going through like warehouse jobs.
Hey, so selling cars at 21, and then you stopped selling cars and started going to warehouse jobs?
Yeah, I started going to warehouse
because you didn't like selling cars.
I mean, I was good at cars. Cars was great for me, but at the time, like I had transitioned, I lost my mom, stuff like that. So things were just rocky for me.
Sorry for your loss.
And I just had to figure out and find my own way. And it was like jobs, they limit your opportunity. You set on such tight limitations.
Gotcha.
And I wanted to be, beyond that.
So right there, you was okay processing. I'm just processing. So you were going to job. Then you was like, man, I'm out of this. I need to start my own trucking company.
Right.
You asked, who do you need to call? You asked somebody, and I want to know that part.
I met somebody, and it was actually a lady friend of mine. And when I met her, she was like, you got all this money, because like at the time I'm young, like I'm only 23, 24 at the time. So I'm young and man, I'm just enjoying life, man. I'm going out, I'm buying drinks for people like I was doing with somebody around 20, 23 would be doing. I was buying drinks and, just spending the money, just blowing it. And she was like, you don't want more for yourself? I'm like, yeah, but at the time it's like a lot of people are paralyzed because they don't have access to the knowledge to go further in life. They don't have access to it. And I didn't know nobody who owned their own business like that. I know people who said they owned their own business, but they didn't have.
And they sure didn't teach you in school.
They definitely don't teach this in school. They didn't teach financial literacy. They didn't teach about credit. They didn't teach about trust funds.
Yeah.
They didn't teach about building your estate. And I have a son, so for him, I wanted to build an empire and secure it.
So your girl, or your lady friend at the time, she said, man, call Russ.
She was like, hey, Russell. She was like, if you serious, you want to build an LLC and do everything the right way and have it properly structured. Russell, man, I talked to him the first time and it was like, I believe when something is meant, you ain't gonna have to question it. You ain't like, you gonna know it. It was like, it was written. It was like,
yeah, no, like it's crazy. Like literally yesterday. So I met Russ about 9 days ago.
Oh, wow.
I've done all what you seen in 9 days. We don't play no games.
Right.
My man got everything. He got the T-shirt. He got the podcast. He got social media. He got all that. But because I understand that success loves speed.
Come on.
Nobody likes slow. Everybody's trying to microwave it anyway, right? So success loves speed. Every millisecond counts, and that's deep. People like, man, he's going a little bit too deep when I talk about millisecond. But I say, okay, if that don't make sense to you,
right,
ask the second place winner of the Olympics.
Come on.
Now,
come on.
You feel me? And so that millisecond counted. You know what I'm saying? And so when I see the relationship, when I met him, all he could talk about was you.
So that was the first conversation you ever had with him?
Literally.
My first conversation, I bought the trust the same day.
Really?
I told him, I'm gonna wire transfer you the money right now.
Done.
We gonna get this started right now. I'm gonna pay you for my estates, my LLCs. I'm gonna pay you for everything right now. We're gonna get it all done right now.
That's powerful.
Because at the time he was explaining it to me, like you said, milliseconds count, man.
Yeah.
And getting everything seasoned and well established. That was very important. People wait till tomorrow, and yes, tomorrow's price ain't gonna be the same price as today. It might be a little bit more.
Wow.
You might miss your opportunity to where,
right.
You got to make the most of every moment you have.
And so y'all met, and now you're all the way set up and you're all the way live.
Yes, I'm actually a partner in Succeed.
Okay.
I took it a step further. This was so wonderful for me. I wanted to educate more people because I believe each one teach one.
Got you.
So,
he's an affiliate out there. He's sharing this gospel. And it needs to be shared. Like I said, this is for everybody. Everybody asks me, at what point do you need a trust? At any point, right? Because what we're doing is, and we're finna talk about this, the 10 reasons why we set this trust up, right? And, we got to understand that, there's certain things that require certain, protocols. And so if you want to avoid probate court altogether, you've got to have a trust.
Absolutely.
There is no other way you're going to be able to do it. A will is a ticket to probate court. You're going to probate court off the will that you provided.
Same song, man.
If you have nothing, then basically it's going to be a 72% chance the state is going to get your asset.
See?
So we don't know this
So
stuff.
they taking grandmama's house.
Man, they taking grandmama's houses. They putting us in disputes
Mm-hmm.
through the will, because a will allows a person to contest it.
Absolutely.
Gotcha.
So if you got a will, they're gonna allow people to contest your will and say, hey, somebody owes money to this guy before they distribute anything to the family.
And that's
See, this is how, right? So because we're under common law. Oh my goodness.
Mm-hmm.
Because we are a citizen of the United States of America. Thank you, God. Man, we can avoid probate court.
Avoiding it. So we're gonna call this
The estate planning.
the estate plan. Let's get it popping. So we got 10 steps on how to rock out the estate planning. We're gonna get your educational part right now. This is the time for y'all to go ahead and get your notes out, because every Succeed podcast is an educational podcast.
Right.
We giving it back to good ground, and good ground meaning that you tuned in right here, and hope you are liking, sharing, and subscribing. So let's get it, man. Top 10, where we at?
So number one reason, people say, well, what is really the number one reason why I need a trust? And, me and Mr.Tyson, there's several reasons, right? But, I try not to put reasons over other ones, but throw one reason out there why you think you need a trust, man. I mean, for real, what is one that stands out to you?
Privacy.
So you're going to pick privacy. And I love that one because, man, now we finna go hard, right?
Yeah.
Privacy.
What does that mean?
It's like, remaining anonymous.
Come on, man.
Yeah.
A lot of times, for instance, we've dealt with a lot of the Black Lives Matter things and stuff like that, and people being racially profiled against, and like people getting sued and based off the assets and things of that nature. Well, what a trust fund does is it prevents you from being known to the public. If you're driving a vehicle and they're running your plates, well, it'll come back registered. If that vehicle's in a trust, it'll come back registered under your trust. So there's really no name for it.
I remember when Russ said that. He said, imagine rolling down the street and the police pull over and it says something World Holdings in the back. He said, that police gonna keep moving.
Right.
Absolutely. Like, who trust babies in this car?
Right. Yeah. I ain't got time to even deal with it.
That's problem. Right. So privacy.
That privacy is everything, because again, if anybody's ever been sued, there's a discovery attorney. Boy, that's the worst person that you can find. That's the worst.
They digging.
She don't want that person on you, because what they're looking for is 7 things. They're looking at how much cash you got.
Number 1.
They finna go to try to seize every account. Look at every bank account you got, bro. Got it? Absolutely. They're gonna ask for it in discovery.
Come on.
Absolutely.
Okay. Number 2, properties. They finna look, man, on the record, man, to see anything in your name, bro. Oh man, he got 3 properties over here. Vehicles. That's so easy for me to look up. So they going from cash to properties to vehicles. Oh, investments. Let's see what type of investments he got tied to his name or her name. Oh, that don't even stop there. Let's go to insurances.
Fact.
Are you a beneficiary of somebody? This is all a discovery. And this what blew my mind, that they would go this far with it. Man, they looking at your charitable giving, man.
Come on. Because they need to see the percentage of, he had to sit. It's given.
Wait a minute. Right. He paid 10% offering, don't he?
Gotcha.
So he gave $30,000 to the church. He got $300,000 somewhere. Am I right? Come on.
Absolutely. That's how they do it.
You see? So what he's talking about when he's saying privacy now is your trust is able now to act in that position for you. Where now, again, you're not giving the church no money. All your investments are owned by the trust. Your insurance policies are owned by the trust. Your properties are in the trust. Your vehicles are in the trust. Okay, your cash. Your cash.
Russell, can I tell him a secret?
Yes, go ahead, Doc.
Man, my whole wardrobe in my trust.
Come on.
Rings, earrings,
The wardrobe
cars,
is in
drawers.
Have mercy. See, I don't know if you should have went that deep with them, but if you're going to go that deep with them,
So, gotta tell him, man.
everything that you own, what does the t-shirt say?
Own nothing, control everything.
Mr. Tyson, you really living that out.
Living it out.
Living.
Day-to-day life.
So you're saying to the people that the things that you already purchased with a sales tax,
With a sales tax.
you sold it to the trust.
Sold it to the trust. My trust. everything.
Now, let me ask you a question. Have you did your house yet?
Yeah.
So the house is in the trust.
So you have to now. Let me explain this to you.
That's fire, right there. That's a whole
You either
situation.
when you have a property, if you own a note or if it's a proper mortgage,
It's a deed on it.
you can only give that to the trust. If you have the house paid off, then you can sell it to the trust. You can't sell nothing that you owe a note on.
Right.
Got it?
Got it.
So without the house even being paid off, we can give it to the trust.
And now it's in the trust.
It's in the trust name. So now you go on Discover and you look it up. It ain't attached to Russel Thompson. It ain't attached to Mr.Tyson. Good luck in going to try to find the person to sue in the trust, because all you're getting is the trust name in the P.O. box. Come on.
I was telling Russ when he first broke this down about snowfall. You ever watch that?
Yeah.
Yeah.
Man, they couldn't find
from the
man.
beginning, man.
Right.
They couldn't find. I seen the whole joint.
I need to look at the whole thing. I ain't seen none of it.
Say they couldn't find. My man had so many problems.
Yeah. Right.
And they looking and looking. It's like the guy was like, and this is before I met you.
Yeah.
I ain't understand what he was saying. It's like,
That
we can't find who owns this. It's deep dived in all these trusts.
exactly.
It was like a trust that owned another trust that
Right.
owned another trust.
Right.
I'm like, yo, okay.
Hey man, so so number 2 is again, really number 1 is the own nothing, control everything concept, right? And we really want people to understand what that really means. And that really means that you shouldn't be taking multiple streams of income. Everybody tells you to create them. You should have multiple streams of income,
Yes.
but nobody shows you how to format them.
Got it.
Right.
See, that's a big difference. So if you're going to really live out, own nothing, control everything, you have to understand how that works. That's in the estate, okay? Number 2, he picked privacy. Number 3, I'm going to pick asset protection. Boy, we can get the asset protection, man. Lord have mercy. Now, look, you can go do research right now and see if you live in a state that has asset protection. Now, we in Texas.
So do we?
Thank the Lord.
Okay. I'm like, hey, what the wrong state?
But not all states have asset protection, bro.
Wow.
That means they allow a person that sues you to come after even your personal assets.
All right, let's name one state that they need to call you right now. Who's in trouble?
Oh, man, California.
Cali need to holler at you today.
Arizona.
Really?
Oh, man, Georgia. Oh, first, Mississippi, Louisiana.
They in trouble.
They in trouble, man.
Really? Why do you think them states don't have it?
What? The
asset protection.
they have their own set of laws.
Sheesh.
See? They have their own Supreme Courts. They have their own rulers. That's why California has its own set of laws. Texas has its own set of laws, right? So you need to know asset protection, right? So again, if you can protect your assets from an LLC personally, because you're an asset protected state, you have another layer of protection by putting that asset into a trust. Does that make sense? So everybody in those states, you got to have a trust. You don't have no other way of doing it. Man, I think this is the reason for why everybody needs to trust is to avoid the probate. There's no reason for somebody to be able to tell you how you're going to leave your assets to your kids.
Absolutely.
And be in charge of that particular situation.
And that's a part of control everything.
See? So if anybody can avoid the probate if they put it into a trust. Go ahead, Mr. Tyson.
And that was my key thing for me. That's what motivated me more than anything. Because when my mom passed, she didn't have a will.
Mine either, bro. I lost my mom in 13. I dealt with the same thing.
It's like, especially if they're well off, you have family members that feel like they should be entitled to them, feel like that, and they might owe somebody some money that you knew nothing about, but here it is. This is supposed to be your inheritance, and it's being split up and divided amongst all these other people before you can even see anything. And that's what's left is only after court costs. You got to think, you're going to pay all of that stuff, and then you get what's left. Like, you get the crumbs. I never wanted my son to have to ever experience that.
Boy, hold that, Mr. Tyson. We got to go to a commercial break. Boy, you dropping nuggets, boy, over here, man. Hey, listen, we going to a commercial break. Y'all come back because we still talking about the actual estate planning and the 10 things you need. Be back on Succeed Podcast.
Let's do it.
I want to thank you for tuning in to the Succeed Podcast. This is a very well put together podcast that we're going to actually, go with a lot of different different topics. Hey, if you need financial planning, you need tax planning, or you need estate planning, give us a call. We'll give you a free assessment. Call Succeed today. Now back to the episode with Wealthy Kane and estate planning.
Welcome back to the Succeed Podcast. It's your man Dream, but Dream motivates, along with Wealthy Kane in the building. My man Russ is holding it down. And man, we in here getting educated, we're getting schooled. And I hope that you have that rewind button if you missed anything, because that number 1 through 5 was very important. And now we're about to go in education 6 through 10. So man, listen, my favorite part, I think my man said it, was the privacy. I like when Wealthy Kane said, I want everybody to understand that I got on my Gucci shoes today, and they in my trust name, my brother. Yeah, you just don't know. I got my Gucci hat on, the master Gucci shoe. By the way, my man Shoe Game is now brought to you by Gucci, and we ain't get no affiliation. I hope we can get some endorsement. My man is Gucci to the sock. And we ain't playing no games, but they are all in the trust. I'm learning, man. Let's go. Man,
so number 1, y'all, own nothing, control everything. We got to make sure we understand that concept. Number 2, we talked about asset protection. Number 3, Wealthy Kane brought up that maximum privacy, right? The maximum privacy, right? Number 4, privacy. We talked about avoiding the probate. Number 5, Wealthy Kane, what you gonna say, man, on number 5, man?
Double taxation.
Double
taxation.
Avoiding double taxation. That's key.
Now,
I feel like if you watching this, and you own a business and you don't have a trust fund, I'm not gonna use inappropriate language, but you ain't on nothing for real. You ain't on nothing for real, because at any given time, you can be double taxed.
Taxed twice.
State, federal taxes. You gotta pay both.
Whoa, boy, wait a minute. You dropping some heavy stuff over here.
That's that two slug,
right?
Before you drop.
That's
right.
Double taxation. State and federal taxes. You have to pay both. And if you own a business, why wouldn't you want a trust fund if it's going to prevent you from having to do both of those things?
So let me back up right quick. So you're telling me that if you operate a business, number 1, you have the right to put your business in a state that doesn't have a state tax, if it doesn't have to have a license with that state, or a permit with that state, or a certification with that state.
Absolutely.
So if you got a real estate business,
you can do.
Hey, you in Georgia, do you have to incorporate in Georgia?
Not necessarily.
See, everybody got to understand it. But if you a doctor in Georgia, who's giving a license in Georgia? The state. So you have to be incorporated in Georgia. Does it make sense? Gotcha. But if we're creating multiple streams of revenue here, some of these businesses that we're creating don't need to be in a state taxed environment. Come on. Lord have mercy.
That's a heavy load.
That's school right there.
We talking about trucking. Because I own a real estate company and I own a trucking company. That's heavy loads.
Thank you. Now, what is the only union in the country that is not a state?
Is it D.C.?
Washington, D.C.
Come on, Dream. You learned something.
Good job.
Everybody says, hey, Washington, D.C. is not a state. What is the reason why?
Man.
Because they had to leave a way for you to avoid the what? The double taxation.
Pop out.
So if you got a common law trust.
It's kind of shaky right
So because there's statutory trust.
Yes.
Which means that's under the state law.
Yes.
Or you can do a common law trust. Go look it up, y'all. I ain't making this up.
What's common law trust under? You want me to tell?
Oh, man, tell them what it is, bro.
That's under federal jurisdiction. So we talked about lawsuits and stuff like that earlier. So with a common law trust, that's something that they would have to, get approval from the Supreme Court to even bring you up on a lawsuit for.
Come on.
With a statutory trust, that's like state. That's like, people can call the police and say, hey, he did this to my car and the police going to arrest you. You got to prove yourself innocent. The state as
factual. So basically you saying the state is on accusations. And the federal is on faccusations. Come on, man.
Notorious accusations. Common law is under federal. When the feds come for people, they already got the evidence.
Come on, man. Stop it.
That's why they got such a eviction weight, man.
Giving them too much, man.
So much, bro. It's a blessing to be a blessing.
All right, what's number 6?
You give them way too much. Now, So everybody understand we talking about double taxation. I want to make sure that you have the right, everybody else has the right to put their trust in a district that doesn't have a state jurisdiction.
Got it.
All right, so everybody, you have that right, okay? Let's talk about, avoiding frivolous lawsuits.
Number 6.
Number 6,
Avoiding
frivolous lawsuits. That's what he just hit on.
But,
You can't bring an accusation against our trust. So, you know what Washington, D.C. says? All fees have to be paid in full before your court case is heard.
bruh.
So that means if you're going to sue our trust,
Better break yourself.
you
Well,
got to be ready to actually come off a lot of bread for counsel in Washington, D.C. Come on. Because you can't have a Texas attorney represent you. Come on.
that's a whole nother district.
And you got to pay them in full before you know what anything can happen. So we avoiding frivolous lawsuits, man. We ain't, but again, I can't tell you where to put your trust. Your trust can't be put into jurisdictions that give you that privilege. Let's just say that, right? So that was what, number 6, Dre?
Number 6.
That was number 6. Number 7, optimize your taxable income. Lord have mercy.
Optimization.
Oh my goodness. Now, all we know is we pay taxes on individually. Am I right?
Correct.
You assess your taxes on your individual self. Am I right?
Correct.
What the wealthy do is assess their tax on their estate.
Right.
Let me make sure you guys understand. I'm not looking at how much I pay tax. I'm looking at how much I pay tax, and everybody I distribute money in my estate to pays tax. So that means if I'm taking money and I'm distributing money to all my beneficiaries, all together, what is our tax rate? That's what we looking at.
They gotta go.
Come on, man.
kinda different.
Why though? The quote unquote people in the rat race are looking and scared of being taxed individually. That's where the big difference is. So we optimize your taxable income by now being able to add in basically everybody that's being distributed to and compare that to the rate of tax rate. Anybody know that you make over $500,000, you're paying 37% tax.
Absolutely.
Plus the 15.3 self-employment tax.
So that means you ain't taking that 500. You ain't taking that 500 home. You taking about.
No.
You taking about.
Uncle Sam is getting more money on your business than you are because that's 52% when you add it all the way up.
Absolutely.
Now, don't be in a state like Georgia. Lord have mercy.
Hold on. So if you would, okay, let me ask you this, Kane. If you won the lottery today, what would you do?
I want everything to go to my trust.
Everything straight to the trust.
Straight to the
So they got, but they have to tax it before they.
Now, the state gonna tax it,
The state gonna tax
but
it.
then there's a federal tax.
So you're gonna avoid the federal tax.
Come on.
What the federal tax. And
Double taxation.
they don't distribute it.
Come on.
They use it after that.
All right. And because his trust is not attached to his social and he's in an irrevocable trust, there is no taxable liability to Mr. Tyson. Okay? So we optimizing people's taxable liability. And that's why you need the trust, y'all. I mean, because again, everybody in the business of making money. We're not in the business to say, hey man, this business we're gonna start, we want it to lose money this year.
For sure.
We wanted to make more money this year. Am I right?
Absolutely.
So if it's gonna make more money, then you got to figure out a way now not to give all of the way to Uncle Sam. And by the way, the IRS says that optimizing your taxable situation and liability is not a crime. Got it? They're telling you, man, there's a different way. But if you don't know, you're gonna pay the highest. You're gonna pay the highest, Doc.
Number 8, where we at?
Number 8, number 9.
Oh, we're at number 9, sorry.
This is what I love. Mr. Tyson, you are now the lender and not the borrower.
Absolutely.
Come on. You're your own bank.
Everything changes.
The trust is the lender.
Everything changes.
You got a family trust. Who you lending to, Mr. Tyson? To the family.
To the family.
Right now, all you have the choice of doing is giving your son or daughter the money to go buy the car. And when you get them more than $12,000, that's taxable income to them. What we do is we let the trust buy the car. Come on. No taxable income to my kid, but now we control the lease agreement that we're going to put in place between the trust and our kid. Now, let me tell you what the wealthy are doing. How are you driving a Ferrari at $500 a month? Oh, that's because the trust bought the Ferrari and then leased it to you for $500 a month. So now I'm the only one on the block driving a Ferrari for $500 a month.
Hold on, wait. Okay, break that down.
Trust has enough money to purchase the asset. It purchases the asset. But in order for me to drive it as the trustee, I have to have a lease agreement in place. Who controls the lease agreement?
The trust.
Gotcha.
They buy a $12 million property, but I'm leasing that property to myself to live in for $1,000 a month.
Right. Same thing.
How am I living in a $12 million property for $1,000 a month? It's because I'm the trustee and I control it. So you're the lender now.
Yeah.
Oh.
You're the lender now. You can lend, you can lease.
Where's the liquid coming from? The trust company?
The money,
The money.
it's coming from your capital holding company.
It's coming from the
All the revenue streams that you created that's feeding into your capital holding company, that's now feeding into your trust.
So you see three levels.
So, bro, come on with it. We got layers of protection. And then the last one is, this is how you build the generational wealth. You can't do it by giving them most of your money to Uncle Sam. The only way you're going to be able to build it is you optimize your taxable situation. You stay private to minimize lawsuits. You avoid frivolous lawsuits. All these things we mentioned are reasons why you need this estate. So don't let nobody talk you out of your destiny. And finally, I want to say this. This estate, Wealth Decay, if I'm not mistaken, is going to outlive you.
Absolutely.
Wait a minute.
Powerful, bro.
You still have control 200 years after you pass.
Come on, man.
From beyond the grave, you can still control everything, and you set up everything to where it's structured properly for your kids to understand how the money's moved. Like you mentioned earlier, how would you, put the assets into the trust?
Right.
How would you get the funding and stuff like that? Well, when you got 7-8 businesses, capital holdings pays the trust and stuff like that. And another thing you touch on is, how the trust is taxed. It's not taxed on the money that it makes, right, Mr. Russell? It's taxed on the money that it keeps. So when you're moving this money around and you got different, 501c3 charities and stuff of that nature. And I mean, that's things that Succeed offers help with all of these things. So structuring everything solidly to being able to provide, a generational wealth, because that's what it's going to take. It's not just going to be one avenue. You want to make sure you're taking every avenue that it takes to build that.
That's right. So there's 4 purposes in life. You can either work for yourself or work for businesses, one of the purposes. So you either going to work for yourself or work for somebody. Family is another purpose in life. I'm talking about what drives us.
Yeah.
Why? What are we doing? What are we up to every day for?
Right.
Business, right? We either going to have to go to work or we're going to work for ourselves. Family. Every time I get up and do this, I'm doing it because I'm trying to put something away for my kids. But in order to create the generational wealth, you got to have investments. You cannot do this on just your income, man.
Yeah. Every time I hear stuff like this at this point in my life, it's just pissing me off about the hours and years that I feel
like you're behind. Right.
I'm like, bro, I didn't hear not an inkling of any of this. So if anybody has a job, no disrespect, but if you have a job and you're making that, let's just shout out to, you're making $86,000 a year, you really probably bringing home about $60,000 a year, and they're just taking your bread.
Again, that's the number 4 one I was going to talk about was charity. Number 4 purpose is charity. Here it is. All of our W-2 employees, they love us because now we show them how to get 30% of their money to their own private foundation.
Absolutely.
Now watch this. You just said it. Either you're going to give 30% to Uncle Sam or you're going to give it to your own private foundation that you can control.
How do they do that?
By donating.
So
the private foundation is a 501.
So when they get taxed on their check,
let's just say they got $100,000. They made $100,000.
Yeah.
For the year.
And they gave $30,000 to their private foundation.
But do they take it out their check?
Yeah, taking out the check. So they gonna donate $30,000 to their private foundation.
So they gonna set that up before they start the job. Or they automatically take it out their taxes.
One-time donation or 2-time, whatever. Take it out monthly. It don't matter. At the end of the year, it's gonna tell them what the total is of what you gave to the private foundation. Doesn't matter when you gave it, how you gave it, right? But if you made $100 and you gave $30,000 to the private foundation, they can only tax you on $70,000 now. See, it's not being taxed on $100,000 now. See,
gotcha.
And then now you got $30,000 in your possession that they finna take and say, you know what? Let's go use this to go buy a property to create revenue for the private foundation. But guess who has access to it? See, that's the next T-shirt.
What is it?
Access versus ownership.
Versus ownership. Access over ownership.
That's it.
Access over ownership.
We want access, man. We don't want no ownership.
Let's go.
We as long as I got the key to turn the door, bro, I don't need to have my name on the document saying I own it. As long as I got access to the car, bro, I don't need my name on the actual registration.
Absolutely.
As long as I got access, bro, it's better than ownership. I have no liability and no taxation to go
That's so
with it.
fire, bro. That's
So we've been taught ownership when actually access is better.
That's powerful. Man, listen, man. We're rocking right here at the Success Podcast. Definitely, how to get in contact with you, bro, so we could go ahead.
And you can go to succeedconsultingfirm.com.
Yeah.
Or you can call Ms. Clark, my executive assistant, directly at 214-292-8836. Make sure you push option 0 to get directly to her. We do have other departments in place. So, again, 214-292-8836. Or you can go to succeedconsultingfirm.com and get, like I said, estate planning, trust, tax planning, financial planning. Those are the 3 things, y'all, that you gotta have. You gotta have some type of understanding of in order to make it. Man, Mr. Tyson, man.
In the building.
I can't thank you enough, bro, coming through, man. And what the whole point is that your mindset is you're well more elevated than everybody else in your time frame. You're not even 30 years old. Yep. I commend you, man, for taking it serious and commend you for living in the trust, right? And then showing this information to your generation, man. Thank you so much, brother. Man, God bless you, man. And you're gonna do big things, bro. I already see big things already happening.
Works.
That's right.
It's already.
I got another T-shirt. It's Succeed We Trust. With that being said,
Come on, man. Keep them coming, Doc.
Succeed We Trust. With that being said, listen, tune in, subscribe, like, and share. It's your man, Dream Motivates from Russel Thompson and the Succeed Podcast. Like, share, subscribe. We'll see you guys later on the next episode. Get it.
That's it.